Everyone, this is Brad Matheny. Yeah, my buddies are going to be posting down here in my Discord channel, but I'm going to try to let that go for now. I promised you all that I would do a tariffs video and try to understand what's going on with the market. So I want you to understand that tariffs are they're a good and a bad thing. Okay, you got to look at it from a standpoint of, I saw this over here in Newsweek. Wanted to show this to everybody because let's talk about this for a minute. So, why is China charging a 67% tariff on goods imported from the USA? Of course, here comes an ad. Go away. Yes, I don't want the advertising. Go away. Oh my gosh, all this stuff. Okay, so why is China charging a 67% tariff on US goods? And why is European Union charging a 39% tariff on US goods? Why is Vietnam charging a 90%? Taiwan 64%, Japan 46, India 52, South Korea 50, Thailand 72. Look at these numbers. These are the current have been the current tariffs on US goods into these different countries. 74% in Bangladesh, 10% in Brazil, 33% in Israel, 34% in Philippines, 58% in Pakistan, 88% in Sri Lanka, Nicaragua. I mean, the list goes on and on and on and on. You can see all these. Madagascar, 93%. These are smaller little countries. I get it. But why are they charging so much for imported US goods? Okay. It's obvious that they're trying to protect their local manufacturing, their local jobs, and their local production and GDP. Why else would they be charging so much tariffs when from U.S. goods and probably others? When what's the purpose of them charging tariffs like this on the U.S.? We export. Why are they charging so much? Why are they making it so expensive for U.S. manufacturers and exporters, and of course importers in their own country, to buy U.S. goods, making it more expensive on their on consumers, their population? It's pretty simple. They don't want the U.S. goods flooding into their market, taking away from their local production, their local produced products, their local produced services. They're basically protecting their economy, protecting their manufacturing, and protecting their jobs for the people by charging this. China's a perfect example. China has an economy that's the closest to the U.S. In the world. Nobody else is even close. But they have a 67% tariff on goods moved into China from the U.S. Why? Ask yourself why. Because they are trying to protect their own manufacturing. They are trying to get their consumers to buy Chinese products and to buy Chinese cars and to buy Chinese made and to protect their own jobs and to protect their own industry and protect their own manufacturing and protect their own economy. That's why China is charging 67% tariffs. It's making it unfair against the U.S. They've got an unfair advantage. So a good example is, say I live in an area. I don't care, pick an area, call it whatever you want to call it. And say I am the biggest economy in the area. I have the largest land mass, theoretically. I have the largest production capacity. I've advanced my production capacity. Let's say I sell, fruits and grapes and whatever. Okay, great. Now, my local people, the other local farms, want access to my clients and my market. And they want access to the money that I'm bringing in because I'm the largest. I have the largest, let's call it trade or economy or business in the area. So they want into my economy. Okay. They want to be able to sell their products in my market because it benefits them to be able to say, hey, I want some of that gravy that you've got going on. I want to access your market, but understand that I'm a little guy and I need to protect my side of it. So what I'm going to do is I'm going to sell my products into your market, and you're going to maybe take a small fee for doing it because I'm the little guy. But I don't want you coming into my farm and taking over my farm and taking over my products and moving your products into my location. So what I'm going to do is I'm going to charge you a 67% fee to move your products into my market. Whereas if you want to move my products, meaning U.S. China's products into the U.S., we're going to keep that fee very, very low because I'm a little guy. I'm just trying to grow my economy. I'm not the U.S. Okay, that's what this whole thing is all about. These things have been set up in a sense that the U.S. is the biggest, baddest economy on the planet. And they want access to the US dollars, they want access to the US consumer, and they want access to the fact that we consume more on a global basis than probably 20 or 30 of these countries combined in the top of the list. So, in order to do that, they want to protect their economy. They want to shove their goods into our economy at the lowest rate possible while they want to take the highest tariff possible to prevent U.S. goods from flooding into their economy. And again, it is unfair. And that is what I believe Trump is trying to do. You may not like it. You may not. You may not see any benefit in it, but you want to know why U.S. jobs left the U.S., manufacturing jobs left the U.S.? Think about Apple. Apple manufactures overseas in China all the time. Why? They're manufacturing a high end product they can manufacture here in the United States, but at a 67% import tariff. Why? They can move the jobs overseas, avoid the import tariff. They can sell to other areas without having to worry about it. And the U.S. tariffs on imported products from China was very low. This is where they're at now after Trump has raised them. And this has been decades like this in this column here. These have been, I don't know how long it's been, but I'm assuming decades like this unfair trade advantage. So now, if you take a look at this number and you say 67 to 34, the way I look at these numbers, if you're going to charge me 67% and I'm going to charge you 34%, in reality, we can go down to 33% here and 0 or 5% here, or maybe go down to 20% here and 5 or 7% here. And it's basically the same number. Okay. At this point, this is just an unfair, ridiculous method of trying to balance the economy, the global economy. Now, I get that some areas might want to protect their economy more. If they're growing, and they're trying to grow on the global stage, yeah, I get that they want to protect from being flooded by U.S. Product. And the way that should be done is that should be done by government investment and supporting a local economy. Meaning, look, I've been down to Malaysia, I've been to Indonesia, I've been to Thailand, I've been to Singapore right here. Okay, I've been to all these places back in the 90s when I was traveling over there selling my software. But the long and short of it is, what you do is instead of trying to say, look, we're going to have import tariffs on U.S. goods that protect our economy and protect our growth, what you do is you try to come to the U.S., work with something that's feasible so you have access to the U.S. market in some degree while trying to protect your economy. And that's what Trump's tariffs, in my opinion, are all about. It's not about, and I read an article that all these other nations are going to raise their tariffs even more to try to combat what Trump is doing. This is the wrong thing to do. Absolutely the wrong thing to do. You're going to isolate yourself from the world by trying to do this. You're going to create a scenario where a $2 manufactured item is going to cost $12 to import and use because everybody's raising their tariffs trying to protect the economy. A free and fair global economy is a free and fair global economy, nothing else. You cannot argue to me and say, well, we need to keep it free and fair. It's got to be as functional as possible, but it's got to be as fair as possible. If you ignore this column, what the U.S. tariffs are right now, the reciprocal tariffs, and understand that this has been the current tariffs on U.S. products going back potentially decades. Look at these numbers: 80, 10, 10, 36, 30, 17, and even our numbers are half of those right now, is what Trump is proposing. They've been much lower, I'm assuming. But again, look at these numbers and realize that all of these numbers over here are designed to protect their markets. That's what it's designed to do. They're charging these tariffs to try to protect their markets. That's it. They want to have local manufacturing, local production, local labor, uh, and support their economy versus importing things from the United States or from other areas. They're basically saying, no, 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 we can't have you come here and take over everything. We have to support the growth of our economy. I get it, but it's got to be free and fair. So we've got to come to the table. We've got to renegotiate this. We've got to determine what works for everybody instead of having the China, sorry, instead of having China charge 67, almost 70% tariffs on US goods, and the US charging what was it before? 6, 7, 8, 10%, probably nothing. So this is not free and fair. And that's what Trump is trying to do. I don't agree with how he's doing it. I think it's going to be a disaster, especially if everybody tries to keep raising rates. But how else is he going to get these countries to pay attention to this? It's look at this. China's been charging 67% on imported US products. US just raised their rates to 34%. I don't know what it was before, probably 8, 10, 12%. I don't know. But the long and short of it is this is unfair. If it was 67% compared to, say, 8% over here, it's unfair. That's not free and fair global trade. That's essentially the U.S. supporting China by essentially buying all of China's products while China has stopped the U.S. from really having access to their market. Same thing with the European Union. European Union is turning around and saying, look, we're going to charge 40% on US goods. Great. If they really want a product, a US product in Europe, they got to pay an extra 40% or more. Okay. Whereas the US didn't do that. We're basically saying, yeah, okay, European Union, you can have access to our market, bring your products in here, have, take away our jobs, take away our manufacturing, and we're going to bend over backwards and give you a next to nothing import rate. Oh, okay. So is that free and fair? 40% compared to next to nothing? No, that's not really fair. Okay. Is Japan 46% on imported products compared to 24, which is where we're at now? Probably it was down in 8 or 10 or 11%. So is it 50% compared to 10%? Is that fair? No. That means that they're basically protecting their economy and their workforce by isolating out American products, American manufacturing, and doing it and have been doing it for decades, literally decades, trying to build and protect their economy by saying we cannot have U.S. goods flood our market, destroy our manufacturing, destroy our workforce, and take away from our GDP. But hey, we'll be happy to flood your market, the U.S., take away your workforce, take away your manufacturing, take away your jobs, and go ahead and flood your product with Chinese or Japanese manufactured products. That's what it comes down to. So again, you look at these numbers. 52% is what India has been charging the US to bring in US goods. Okay, that's what they're doing to protect their economy. I think what it should be is down around 10, 12%, and the US tariff should be down around maybe 2, 3, 4, 5%. To me, that's fair. This is the way Trump has proposed it right now. It's a 2-to-1 ratio. This is two times what this is. So essentially, if this is 10, this should be 5. So why can't we all break it right down to a comfortable, free, and fair level? And I believe that is what Trump is trying to do. Instead of 67% and 5, which is a what 110% markup, it should be where this is maybe 20 and this is maybe 10. Instead of a 39 and 5 or whatever it is, which is again an 800% markup, it should be 39 or it should be 10 and it should be 5 over here. It should be something nominal where it is a real free and fair trade, global trade function. You know what? Manufacturing is already established overseas in a lot of these countries, whereas it's not in the United States. What's going to happen is it's if we open up free and fair trade, it's going to become much more functional as a global economy. You're going to see goods moving around much more efficiently. You're going to see, economies prosper much more efficiently, in my opinion, the way it is right now, because we've had decades of this, decades of the U.S. supporting economies. Now, granted, certain economies, like if I were to come in and say, Brad, some of these countries are really poor, really need some help, like Chile. Not no offense, Chile. Not trying to say that you're at the bottom of the list or anything like that. I'm just saying that I understand Chile is still trying to build their economy to compete on a global scale. But look at Chile. Chile charges us 10%. We may not have had any tariffs on Chile before. In reality, if it was a 10 and 5 or let's call it a 4 and 2 ratio, you know what? That's pretty fair. And maybe Chile should come to the United States and say, "Hey, we want to try to build our manufacturing. What can we do cooperatively to try to help that out?" Okay, or come down and look at Dominican Republic. Here's another one, 10%, or Peru, 10%. Okay, Peru's got a lot of mining and other stuff, but you know what? This is a country that's pretty much on par with the U.S. They're not really trying to harm the U.S. They're not really trying to harm themselves. That's the way I look at it. This is a country where if they really needed to try to protect and grow their economy, you come to these other nations and you say, look, Peru has got qualified workers. They've got qualified capacity. What can we do to build up Peru without having to, unfairly start to tariff everybody? And that's what it should be done. So when you look at these, Norway, 30% compared to what? I don't know what it was before. 0, 1, 2, 3, 4. I don't know what it was before. But if it wasn't anywhere close to 15, then that's basically a 100, 200, 300% markup. The Norway's trying to protect their economy and harm the U.S. by having these high tariffs. And the U.S. was basically saying, "Oh, okay, yeah, we'll just bend over and take it, and yeah, okay, whatever. We'll just lose. We'll lose. We'll lose. We'll lose. We'll lose. We'll lose. Thank you, Sri Lanka. We'll just lose. Thank you, Nicaragua. We'll just lose. Thank you, Myanmar. We'll just lose. Okay, no problem. That's how it's been. Thank you, Laos. We'll just lose. Thank you, Afghanistan. We'll just lose access. So again, you have to look at this from a standpoint of, it may seem unfair, it may seem ungodly, it may seem difficult, but at the end of the day, I believe that you look at these numbers, you know, 60, 70 to 35. That's a 2-to-1 ratio. Why can't this be 4? Why can't this be 2? It's still a 2-to-1 ratio, right? The numbers are smaller, but it evens things out. Why can't this be 10? Why can't this be 5? Why can't this be, it's again 10? Why can't this be 5? Why can't this be, look at this, 10? Why can't this be 5? Come on, guys, go to the table, think about it. This is harmful. And if these guys start raising rates, like the European Union is threatening to raise U.S. tariff on U.S. goods, all you're going to do is knock this up to 55 or 65, trying to protect what you think is fair, and come down here and again make it an unfair advantage. If this was 5 before and at 39, that's an 800% markup. So now they're going to come around and say, well, this is 20. I need my 800% markup. So I'm going to make my tariffs 120% or 160%. No, guys, this is not free and fair. This is not a global economy. When these countries are charging this type of an import fee on U.S. goods, protecting their own economy, while the U.S. is paying this, or the manufacturers and importers are paying this, and the U.S. is saying wide open, bring your goods over, come on, we'll help you. We're gonna go ahead and open up our market while you guys have closed yours. Is that free and fair? Is that really what the global economy looks like? I mean, I get we need to have some balancing in here, which is why I think more reasonable tariffs are demanded. But realistically, guys, is that free and fair? Is that how the global economy works? This, to me, this is 100-year-old tariff structure. It really is. This is really 100-year-old after World War II. The United States had a huge manufacturing and capacity and economic base. And I think a lot of these tariffs were set up throughout negotiations back in the 40s, 50s, 60s, 70s, when a lot of these countries were really just trying to build. Like I said, I've been to Malaysia, I've been to Indonesia, and I can tell you, Malaysia has gone literally, they've seen, I don't know, they've seen 100 years or 120 years of growth over the last 20 years, 30 years, before, compared to where they were 30, 40 years ago. And I'm talking the 90s. When I was down there in the 90s, the Petronas Towers were there. They were building up. They had I can't remember the name of it, but it was their technology center, Putrajaya, set up. And that was 30 years ago. So, you know, we're not at the same point we were 40, 50 years ago, is what I'm trying to say. We are not there. And we need to rebalance the tariffs. Now, coming back over here, that's why I keep telling you, and again, I'm going to run out of time here. That's why I keep telling you that we're going to move through this phase. Okay. I don't see any real growth impetus in the U.S. economy, in the global economy over the next 4, 5, 6 months until we get out towards the end of 2025 into 2026. And that's why I keep telling you that we're going to move into this downward cycle. Yeah, it could be a little bit further. It could be down into this mode. But until some of this stuff gets settled, which is what Trump's plan is, get ready. We're going to have a real lack of growth factor in the U.S. and global markets, meaning you better be ready for what I've been telling you the last 6, 7, 8 months. You better be ready for a downward cycle, expanding type of a wedge formation between these channels here. It's gonna basically be like this until we reach our low. Excuse me, quick little sneeze. So understand it's going to be like this big, thick line until we reach our low. That's way too thick. All right, let's make it more reasonable. Okay, 25 minutes. I'm out of time. I'm going to let you go. This is the tariffs video. Get some, be prepared, and I hope you guys are paying attention.